We are looking at a crossover here of the RSI and simple moving average, and we are at the 50 RSI level. We are on the Aussie JPY on the Asian session. So we just go over to our platform to perform a trade using that strategy to demonstrate how powerful this strategy is. So we'll go from Aussie yen, and the next available expiry is 10:15. That's about 30 minutes. So just press high and investment amount of $50, and then we'll buy. So our trade is in the money at the moment. We just 1 point in the money, but we still have got 30 minutes till the trade expires. So we'll just pause the video and we'll come back to you at expiry. We're back. We've got 45 seconds till the trade expires, and it's 10, 14, 21 seconds. And our trade is in the money, and it has stayed in the money except for a small blip here. Let's go back to our MetaTrader 4 platform to show you. So let's just zoom in the chart so that we can show you our entry position. So our entry position was at this candlestick here that bounced off the 100 exponential moving average, and the RSI was crossing over the 8 exponential moving average, and RSI had crossed above the 50 RSI level. That was our trade expiring, and the trade has expired in the money. So let's just zoom in the chart so that we can have a bigger picture of the trade. So as you can see, our trade was in the money for the duration of the trade, and it has moved in a ballistic move in our predicted direction. So this is a very powerful strategy. As you can see, the price tried to find support as the entry price, showing how powerful this strategy is. So I'll show you our entry position again, somewhere around here, and you see the next candlestick was a bearish candlestick, and this was a very good entry position because of this pin bar that has bounced off the 100 exponential moving average. So we just load some other charts to see if we've got any available opportunities to show you how powerful this strategy is. Here we can take this trade on USD JPY on this divergence here. If the RSI crosses the 8 exponential moving average here, so we just wait and see. But again, this is not a recommended style of trading, as it is against the trend, and it should be traded for 10 to 15 minute expiries, not longer than that, because you're just looking at small movements against the trend. But this is not a recommended style of trading. You can see here RSI is crossed over 9 exponential moving average. Let's go to a platform to see if there is an expiry that is within 10 minutes on yes. So we do have 10:30 as the next closest expiry. So we just take this trade to see how this trade pans out. So a low, and then we buy. So this again, this is a very low probability trade due to the fact that we are trading against the trend, but divergences are also powerful. As you can see here, we have got a lower high and a higher high, and RSI here has crossed down at exponential moving average, and we've got a lower high there as well. So we'll just wait and see how this trade pans out. Let's just look for other opportunities to take trades. This again is a trade to avoid, if even if we can see here that RSI is trying to cross over the exponential moving average due to the fact of the moving average here, because the price has breached the 100 exponential moving average, and now it's bouncing back. So it is most probably that the price will try to retrace a little bit, and then it will bounce back off, as it is trying to do now, bouncing back off the 900 exponential moving average, and it will continue along. So this is an example of when to avoid the signals being shown here by the RSI. Let's go to Aussie JPY. So we took this trade earlier on, so we just avoid this currency pair. GBP USD, we do not have any valid trade, and GBP JPY, here you can see here that RSI has bounced off the 50 RSI level, and here RSI is curving towards the short side. So here we can avoid, and we can see here this candlestick, this large spike, so we can see this as a correction. So that's another trade to avoid. Let's go on to Euro USD. Euro USD, we have here RSI crossing over the exponential moving average, but we see here we only have got one candlestick. We should wait for 2 or more 3 bearish candlesticks to validate this signal. So we see this signal, it's a mixed signal, because we have the RSI crossing the moving average on the bearish side and coming back again. So you see it's coming back, so it's a mixed signal, another signal to avoid. So we'll just pause the video. We'll come back to you at 10:30 to show you how our trade is panning out. We have 10 seconds till the trade expires, and as you can see, the trade is around the entry price. So we have pointed out earlier that this type of trading against the trend should be avoided at all times, and we have expired out of the money just by 1 point. So expiry price was 70620, and our entry price was 70619. So let's show you on our chart here. So our entry was around this candlestick when RSI had crossed over the simple moving average. So this is a classic example of when not to use this strategy. We took based on the divergence that is shown by the RSI, and we were aiming for a trade to expire in the next 10 to 15 minutes. So we chose 15 minutes. That was the next available exit price. So if you trade against the trend, this is what happens, and you can lose money. Simple as that. So we're just looking for another trade just to recover our losses. again using the same strategy. So we have USD JPY, and we've missed that entry. So just move to another currency pair, Aussie dollar. That's the trade that we took earlier on, and we'll try to avoid this currency pair. Yeah, that's the ballistic move that was talking about earlier on Euro JPY. So we'll take this trade, Euro JPY. Let's see if we have that's 10:45. That's about 50 minutes. So this time around we'll shoot for 125 for our investment amount, so that we can recover our loss on this trade. So let's go back to our chart again to see. Okay, let's wait a little bit for the price to retrace again, and then we enter. So Euro JPY for 125 investment amount, we just enter this price. So our entry price is 132.070. Okay, so let's go back to our chart. Let's see if there are any other valuable opportunities for us to enter. We have another opportunity here on the dollar yen. As you can see, the price is retracing a little bit, and we'll just take it as a valid entry position. But let's see if we have got that's another 15 minutes as well. So let's come back to see our volumes here decreasing. So we'll just wait a little bit, and RSI has opened the gap, so we'll just wait for further confirmation for the validation of the signal. So move on to another currency pair. This is GBP USD. We've missed the entry point, and GBP JPY, we've got here the entry is valid. So go to our platform, GBP JPY, investment amount of 125 to expire in 45, 10:45. So we do have two open trades at the moment. This one is in the money at the moment, just hovering at our entry position, and this one has gone out of the money at the moment as the candle stick is retracing a little bit. So let's go to Euro USD to see if we've got any entry position. There is no entry on our RSI at the moment, so just see. Okay, so that entry is now available on the Euro JPY, so we will go on Euro JPY for investment amount of $50. So let's go back to our chart to see. Yeah, so we'll enter the investment amount of $50 to expire at 10:45. So we do have 3 open trades that are expiring at 10:45. So we've entered Euro JPY twice, but the same entry position. Okay, so we will pause the video, and we will come back to you at expire to show you the results. We have 20 seconds till our trades expire. We've got this Euro JPY that we took at 10:32, and it is in the money, and the GBP JPY that we took at the same time, is in the money as well. And the third trade that we took is on Euro JPY, expired in the money. So GBP JPY is expired in the money for a gross return of $225. So this has enabled us to recover our previous loss on that other trade that we took on Aussie US dollar, and this is also expired in the money. So we have 3 trades that is expired at the same time in the money. So let's go back to our chart to show you what happened here. So our entry position was around here when the RSI is crossed over our exponential moving average here, and we see 3 candlesticks has gone in the same direction, and the bullish direction. That's on our Euro JPY. Let's show you on the GBP JPY. So on GBP, RSI has crossed over the 8 exponential moving average here, and we can see this candlestick had bounced off 100 exponential moving average, and we took that trade to go long, and we see 1, 2 candles, and the third was bearish. It was a pin bar bearish, and we see this one, the fourth candle is forming as a bullish candle. So this is how you trade this using this strategy. So let's see if we still have got any other opportunities that we can take to show you how consistent this strategy is. This is the trade that we took earlier on, and we lost on this trade because we were trading against the trend. So we just avoid this currency pair, and I'll probably come back when the RSI has started going long. So here we see that it's retracing a little bit, so we just wait for the retracement to finish. So go on Euro JPY, we took this trade, so we just avoid this currency pair. We've got Aussie Japanese yen. With this trade, we'll probably avoid it because it is correlated to the Aussie US dollar, the GBP USD. The currency pair is retracing at the moment, so avoid it. GBP JPY, we don't have a valid entry position. Let's check Euro USD, no valid entry position, so probably call it quits for today. We have had 4 winning trades and 1 losing trade that we had taken against the trend. If we had avoided that trade that was against the trend, we could have finished 4 trades in the money. So this is how you use this strategy effectively to improve your results. We've taken this trade based on our readers that were saying that we're using this strategy on a demo account and they were losing. So it is best to avoid crossovers that are against the trend. So as you can see here, we have a crossover here, but the price is above 100 exponential moving average, so it is a low probability trade. You can take this trade if you are a very aggressive trader, but it doesn't have any higher probability of winning. So it is best to stay out of the markets when you see a crossover that is against the trend or that is above the 100 exponential moving average. So you only look for crossovers that are within the trend. So we see here, we just show you that initial loss that we had. We took it somewhere here. If the trade was going to expire under 10 minutes, it was going to finish in the money, but it it's not a guarantee, because we can see that the trade went into the money immediately, and on the formation of this candle, the trade finished out of the money. So thank you for watching. Happy trading, many pips ahead.